Well, I think the issue is going to be worrying about uncertainty. And the second issue, I think, is what's going to happen to inflation. So the Fed's making a bet. They've decided to cut rates. From a point of view of where the economy is, this was, I don't think, was justified. That I think that the concerns about uncertainty and the trade war, we could get information about that in the future. They acted more preemptively against insurance against it. I'm not sure that was the right thing to do from that perspective. But there is an issue that inflation is low. And so
it's like the chupacabra. I mean, you've heard about it, but it never seems to show itself. Well, and we've got wage gains, we've got tariffs, all these things that should be sort of inflationary just aren't there.
Yeah, I mean, it's clearly a puzzle. And I think one of the key things about doing successful policymaking is to admit when you don't know. So a very big issue is what's what we call the natural rate of unemployment, sometimes called the NAIRU. And the reality is we're just not sure what that number is. Now, I actually tend to worry more about this issue that running an economy at this high pressure type of economy could actually cause problems at some point in the future. I think that is...
What kind of problems? Because
there's a view that's very clearly stated, Jay Powell stated this, that the Phillips curve seems to be dead, that the tight economy is not producing any inflation. And actually, research that I've done indicates that view may be not really quite correct, that it has a lot to do with how the Fed has been operating in the past, and hopefully they'll continue doing so in the future. But from that perspective, you have to be nervous about it. But on the other hand, we just haven't seen the rise in inflation that we'd like to actually see. Yeah. And so from that viewpoint, if the Fed really that's the real concern, then it's justified that they want to actually goose up the economy a little bit. And that's what they're doing right now.
So I'm just curious, there is some expectation that the Fed in this meeting would have had discussions about whether they should change the target inflation rate. Is that something that you think should be under consideration?
So there is the Federal Reserve right now is doing an extensive study of how they should change whether they should change their monetary policy strategy. It turns out, I think, that the issue about changing the inflation target is probably not the right answer. But the way you do the inflation target is a big issue. And in fact, I've argued that the Fed has to basically say that there are times when, in fact, if you've been undershooting the inflation target, you should be happy about overshooting it, because on average, what's key is that on average, you actually should achieve the inflation target. That's a change from what they're doing. The way they do things now is bygones are bygones. Wherever you've been in the past, no worries. We still shoot for 2%. I think they should modify that. But there's been a lot of talk about this. There are reasons why raising the inflation target solves some problems, but actually could create others. And so, to me, Greenspan got it right when he said, what is when we worry about inflation, we worry about it when it starts to affect decisions. And it said, in fact, not having that happen means that firms will focus on what they should focus on.
We have a short time left. I know Mona and David have quick questions. Jump in there, guys.
Oh, yeah, no, I think from our perspective as well, we do think the language around symmetry around inflation makes a lot of sense from the Fed's perspective. It's been running kind of cold for 5 years plus now. Could they let it creep upwards beyond their 2% target for 5 years plus? Absolutely. So I think the inflation metric almost gets taken out of the equation. And then we're back to the others. Economy. They want to continue this expansion, global uncertainty around trade and global growth. So I think those metrics come to the forefront more from the Fed's decision.